Hi and welcome to the Market Alert for Tuesday, the 3rd of August 2021. So stocks, bond yields and crude tumble as ISM peaks and Fed speaks. With tapering, we should go early and go fast in order to make sure we're in a position to raise rates in 2022. So talk about destroying the stock market. This will be interesting to see if they follow through with this. I very much doubt it after what happened in 2018 when they tried to do tapering then and the market fell out of bed. They soon stepped in. But I have noticed as well with this headline that the IMF has creates a record 650 billion slush fund for the pandemic relief. The creation of reserve assets known as special drawing rights is the first since the 250 billion issued just after the global financial crisis. So do they know something that we don't know that's coming down the line? Considering that all of the banks are absolutely loaded with liquidity at the moment because we've seen already $1 trillion on the reverse repo. It'll be interesting to see why they've printed 650 billion in order to for a pandemic relief when actually the pandemic was last year as well. Very strange, but we'll find out as we go along. News today, we've got just Spanish unemployment change. That's out at 8 a.m. Tomorrow we've got ADP employment, non-farm employment, heads up for Friday, which you'll see there. That's the big one this week. This is what the market's going to be waiting for. If it goes quiet, this will be the reason. And also we've got a lot of UK news on Thursday and interest rate, etc. and asset purchase as well also for the UK. So yeah, it gets interesting after today. Lots of news, ISM tomorrow as well for the US and the usual weekly crude oil inventories. So a lot of news, but the main one this week is going to be the non-farm payroll. So let's have a look at the markets, see what happened during yesterday. We'll start off with the Dow, if I can find it. And in the daily chart, we had a new all-time high yesterday. This happened during the afternoon session, or the opening session for the Dow. And I'll show you this in just a moment in the 30 minutes. We did fail after this and the market moved lower, as you can see, trading down to 89 at the low there yesterday and the 20-bar moving average. The market trying to move back to the upside. It's looking at the moment that trying to put in a new high is going to be very difficult unless there is some other news, i.e. more QE, which they're not going to do because they're talking about tapering. It's the QE that's kept the market moving to the upside. So there's not a lot on the upside for this market at the moment, which is probably why we're seeing it trade in a sideways range. So it will be interesting. There's the all-time high for yesterday in the Dow, and you can see immediately after the market then moving sharply to the downside, bit of a bounce overnight, and this is yesterday's low to watch out for, which was the 89% retracement in the daily chart. Meanwhile, in the German DAX, just grab the daily chart. We can see that this nowhere near the all-time highs, looking very weak indeed. This is the high last week. We managed to get through this yesterday, the 15,692, but then the market failed and returned to the downside, closing back below the 20-bar and the 5-bar, trying to move higher on the overnight, but not looking too spectacular at all at the moment. Looks fairly weakish. And from this low to this high would be your downside targets for the DAX. And it's interesting because I'll just drag these across here. There's lots of support areas that have been quite significant. So again, there'll be this sort of levels here on the downside should the market move lower. And on the upside, there's not anything that I can draw to, so the only way to overcome this for the upside is to either keep these fibs that we've got in here, including this one on the upside. Alternatively, if you want to see how much strength this has got coming back during today, then you can just click twice on the top there and that will put in the fibs for you. You can see at the moment the market heading towards that 38. Now if you just select all of these, I can drag them all out and I can see those as the market, should it move to the upside, where it's likely to find some sort of issue there. In the 2 minutes overnight, you see the market gapping, but this gap soon got filled and the market's been trading sideways. But just recently, as I was preparing to record, has had a bit of a spike to the upside coming off yesterday's close. Market sideways there at the moment as well. Just go to the 30 minutes. Again, you can see yesterday's move sharply to the upside. Big gap here because ETX stopped working, which we'll see in just a moment. And then the market following the Dow had a bit of a bounce in the afternoon back to the high, and then market trailing off. But starting to show a bit of support there at the moment. You can see we've got a retracement there trying to move higher. Well, if it's going to move higher, it's going to need to go through the DP. You've got the R1 and you've got yesterday's high as well. It's a lot to ask for to move back to this level. That's 150 points from where it's currently trading. If not, we head down towards the low and the downside and those fibs that I've drawn in on the daily chart. So take out yesterday's low, which is, like I say, it's looking fairly weakish. If you come back to the daily chart, take out that low, then we're heading down into these areas of fibs here. And in the metals, well, as I said last week, don't worry about the market running off because they're not going to allow it. And you can see this is already happening overnight. Market already weak. We're going back down to 89, I would imagine. So I'll just draw this in now so you can see we're at 38. But the one you want to watch is 24.59, the 24.50 level. I expect to be retested by the banks because they don't want the silver market going up just yet, as it would show that the financial system is starting to fall apart. And the same with gold. They've allowed it to hold at this level, but again you can see that now looking weakish as well. It's interesting because, as you'll see in just a moment, the the dollar is actually sideways to lower, and yet the gold price and the silver price are under pressure. It's moving in the same direction, which is not normally the case. And there you can see we've got a bit of demand in this market at the moment, but price is finding support, moving slightly lower on the overnight, but like I say, they're not making or letting a good opportunity to slam the price lower on silver. They're already starting to do that. It's hardly a slam, I know, but wait till 130 and then see what happens there with the gold and the silver price. So yesterday we did see the futures market move the prices higher, not a great deal, and then we got into the main event and moving the market higher. Had a look at the daily chart, see where we were, and you can see they're trading up to the R2, which was out of the daily chart of the DAX. I'll just find this for you. This would have been the 692, and drew that in on the the orange line there. And you can see the market stopping at the fib from the daily chart. Prices then stopped, and that was it for half an hour on the ETX platform. Nothing happened. I did phone and spoke to a charmless individual who said we could take phone orders. I said, well, that's neither use nor ornament when you can't see the charts. So with that, we had to wait, and also the silver was missing as I showed yesterday, but they managed to get it sorted. And then prices traded back down to the high, and with the missing data it's always a pain because you don't know whether you've got an accurate calculation, certainly with missing prices when signals are based on or include averages as well. So then the market drifted all the way down to the DP level, just below it and back, and then into the afternoon we had the ISM news at 3. The market was sideways, waiting for this. The Dow went on to make its all-time high, but the DAX wasn't having any of it. Traded sideways, waiting for the news. there was a sell signal, and just watch the volume here. They knew there was news, they tried to move the market lower, and just watch the volume come straight back up there, narrower range, and more volume, which indicates that they must be buying, because they have more volume and not move lower than the previous bar. Then there has to be some sort of buying there. So then the news came out, wasn't that good. If we just go back and have a look, you will see Monday, wrong week. Let's go back to how we're going to do this. There we go. Yeah, so the ISM came out at 59.5, 60.8 was the forecast. As it said in the headlines, peaked out. The market used this to its advantage, moved sharply lower, and then immediately brought the market back again, which you can see there. Then we get a retest of the low, which you can see there. And again, you can see an increase in volume as they bring the market back. And then we get a potential buy signal. And then I was watching this, and this ran out of steam. The 5-bar moving average had moved up to break even. And again, just making no headway. And as it came back, decided to get out of the trade, which the 5-bar moving average was indicating there was momentum starting to disappear, and the market was then brought back. You can see we've got from there back to there, we've got 78% retracement, and then the market just got into a sideways move until the end of the session there. So a very strange day yesterday, but not helped by the fact that ETX failed for a good half an hour during the morning session, and then the ISM getting in the way of the sell signal in the afternoon, and then no momentum after to the upside. So fingers crossed, we'll see a bit more today. Well, like I say, keep in mind it is non-farm payroll week as well, and also a lot of traders taking advantage of the fact that they can move around at the moment with holidays as well. Okay, that's it for this one. If there is anything else to report during the session, I will let you know. But as ever, thanks for watching. See you in the next one.